EMA Crossovers for entry and exit signals. Welcome back, traders. In our previous episodes, we explored the applications of EMA in trend determination and support resistance levels. Today, we'll focus on EMA crossovers and how they can be used as entry and exit signals. EMA crossovers occur when two EMAs with different periods intersect. These crossovers can provide valuable trading signals. For example, when the shorter-term EMA crosses above the longer-term EMA, it generates a bullish signal, indicating a potential buy trade. Conversely, when the shorter-term EMA crosses below the longer-term EMA, it generates a bearish signal, indicating a potential sell trade. Traders often draw trend lines connecting swing highs or swing lows in a trend. The intersection of trend lines and EMA lines can provide additional confirmation for trade continuation. When the price retraces and touches both the trend line and the EMA line, it strengthens the case for staying in the trade. Traders often use additional indicators, such as the MACD, to confirm EMA crossovers and avoid false signals. It's crucial to consider other factors, such as market conditions and overall trends, before executing trades based solely on EMA crossovers. Well done! You've learned how to use EMA crossovers as entry and exit signals. In our final episode, we'll discuss risk management and incorporating EMA in your trading strategy. Stay tuned!